What's going on, everyone? Welcome back to New Month Game Plan. This is a big one, and I just want to first congratulate all of you, anyone who's traded this year, anyone who's made their way, taken risk, and really gotten themselves to the point of belief in themselves to be able to reach this point. We're halfway through 2026, and that means we're getting older. We're being blessed with more life. And we're given another opportunity to attack the rest of this year and hone this as our own. And so we're going to be covering the exact setups that you want to be looking at, some of the strategies you want to be applying. And I want to make sure that once we get into this, that you guys are prepared. I need your time. I need your attention. It's always a privilege to have your time. And we want to make sure that we can meet you exactly where you are. And so tonight, we're going to be doing 5 things. All right. We're going to be grading our work, what we did and found in June. I'm partnered here with Jamal, who is here on our team and is an expert at charting, tracking these trades, and really giving a lot of game of the opportunities and how to find them. And so we're paired together to make sure that you are equipped as we're looking at the half that just closed and what's setting up. We're going to be laying out the July calendar. We are starting July with the holiday weekend, and we're going to be also rolling into earnings. We have another Fed meeting, the second meeting with Powell now gone. And then we're going to jump into our setups. If there's any tickers that you want us to review, feel free to drop them in the chat, and better yet, make them part of the community. If you want to be part of the community as well as get a fully free indicator, you can go to this link that we're posting in the chat. That is how you get access to asking us questions, engaging with other members of the community, and getting your hands on a full day trading system. So now we're going to jump into this, all right? And so what we have here in a quick roadmap so you know where we're headed. First, we have the June scorecard. We're going to be reviewing our calls. We're going to get into the overview to think about what's ahead and what the narrative is going to be going into this second half. We're going to be discussing key dates here, having this available to you, and that you are able to also make sure that you are set and having those dates along there. Yeah, are you guys able to hear me? Press one if you hear me. Yeah. Okay, cool. So, uh, we have then we're gonna get into what the smart money is going to be doing, how to follow them up, and then also thinking through the what is the Trump administration doing? What are some of these big players, some of the insider traders, and what type of tickers and opportunities we can find there. And then we're going to close with your action items, what you should be taking from all of this, and then positioning to do as we lead into after this session and how you take this to the market ahead. And so essentially, June was a bit of a two-faced month. But what we covered and what we called when we had this session back in May was that this was going to be one of the craziest months of the entire year. And oh, so it was. And we found some of the biggest trades and opportunities that we found in the entirety of the entire year. All right. And so what's interesting is that the S&P actually, at least at the end of June 29th, had closed down about 2% on the month, but it finished at all-time highs, just around there. And so we had a bit of a rocky road when it came to the S&P 500, what we found there. But we had a really strong start to the year since January. But it seems as though once we entered this quarter, from about April to now the end of June, we had a bit of a rocky road. Some really big drops, as well as some bounces and recovery. And that's what we've seen over the past few weeks. And so there's a bit of a rocky road, and there were some challenges there. Additionally, the Fed, when we're thinking about our new Fed leader, Warsh, we didn't get a interest rate decrease. What happened is that there's actually a possible hike later this year. We unchanged interest rates. And we're leading into this with the idea that, hey, we're going to be a bit bullish. Hey, Trump hired this guy. They want to increase the overall essentially to make stocks go up, right? But decreasing the interest rate was what Trump wanted. We didn't get that, especially as inflation hit some of its highest peaks since 2023. And so that adds to a pivot for how we might be considering the market, or at least a lot of these big players. And then the third thing is that we had sell the news. Again, Broadcom and Oracle, they had some really big numbers, but they still dropped around their earnings, and as well as how much spending that they're doing on AI. And that is something to consider for a lot of the stocks that we're looking at, especially Meta, especially AMD. And it's the same lesson that NVIDIA taught us in May about all this expenditure can be a bit and make us cautious around how much movement or opportunity we can get out of this if that expenditure starts cutting into their profits. And so that's going to be, and what lessons we're able to pick up from that will add to our July playbook. And so, in just reviewing, and then Jamal, if there's anything you want to add on the side once we look at both of our score sheets. Uh, First, from a lot of the tickers that we covered last month, Robinhood, once again, absolutely insane opportunity. We called it the trade setup of 2026. And later in June, we were able to deliver super big on that. $40,000 trade, one of the biggest of this year. And we turned multiple hundreds of percentage in multiple days trading Robinhood alone. And so that has been the gift that has continued to give. And we may be considering it even going into the rest of this year. And that was around the news as we positioned all of this same time a month ago about the amount of transactions coming in, AI agentic trading increasing those transactions, them removing the day trader limit. It opened a huge opportunity and added to the volatility that we're even seeing right now in the market of how many traders are now in the fray. Something that didn't go as expected was Oracle. We had a really great win actually at the very start of Oracle, and so that was pretty great. We had a winning trade on the first trading day of June, but uh, Oracle kind of tumbled its way for the entire rest of the month, which we can say we didn't expect like that, and it lost over $100. Furthermore, we had ARKK, which we'll actually talk about a bit more later. But that traded a bit sideways. Didn't really trigger from where we were looking for. And then furthermore is Rivian. Anyone here trade Rivian recently? We found a big opportunity at the start of the month, and now a rebound at the close of the month. And so Rivian is still an angle of opportunity as it may return back to $20, but we're still choppy there. And then now consumer staples and more. We were exactly on the money there. B plus that we're rating that for Pepsi and PM. So more so Pepsi, where we anticipated a significant drop. And that was the bearish setup we picked up along this way. And oh man, did that deliver. Now, Jamal, I'm gonna pass it to you just to think about some of the trades that you charted and what you thought about how this, went along the way.
Sure. If I could be a little candid, I kind of wanted to do better last month, but we did have some things that did go our way. For the first half of the month, or the start, Ford did definitely have one of the best days that it had in the last 7 years, as you can see there. It was really hot off of the news with it going into the AI sector, using its batteries to provide power and whatnot for them, but then it kind of fizzled out. DJT, I think that might be a typo. But I can't remember actually what it was that we hit on, but I'll do some research. My mind gets so boggled by all of these different stocks. But definitely I wanted SoFi to kind of stay above $18. So this is one of the ones that kind of had a great, first half of the month and then kind of fizzled out as people, took profits or whatnot. But SoFi is still something that I'm going to be looking at for the entirety of the rest of the year, just to see if it, can get back to those greener pastures. So Figs was kind of a letdown. If you look at Figs, it kind of did the exact same thing, had a nice first couple of days for the month, and then it kind of just started to break down. Now Coin was definitely choppy, and it was actually more towards the downside. So that's why I say I really wanted to do better last month, and so I'm going to try my best to, make it up this month going forward. As you can see, June humbled the easy money. So I thought these would be easy money plays, but it definitely humbled me and the sentiment that I had. But along with that, with the PDT rule, they kind of threw away that trick and then introduced a whole bunch of new tricks that we have to figure out now going forward. But I'm ready for the challenge. Definitely prepared and ready for the challenge. So
Yes,
there's an echo.
sir.
Are you hearing an echo?
Okay, no, it seems like we're good.
Okay.
But no, definitely ready for the challenge. Especially to pick up the pace and start this next 6 months off right, and start to develop a bit of a rhythm. Because yeah, we had a bit of a rocky road, and honestly, we ended the month off of just a little bit of choppiness in some areas over the past 2 weeks. And and yeah, there was something here noted down here. June, while there was so many great opportunities, it definitely humbled the easy money, right? And so there was a lot where our macro analysis can and was there on point, but with actual execution, we had our really great moments, but also some challenging moments that would end with some consolidation and then leading to us getting chopped out, you know? And so definitely, for all sense and purposes, we definitely had the craziest month here of the summer so far. All right. Um, and so that leads us to what we have to think about and revisiting what we covered earlier in the year, what we are looking at forward. And so this first half of 2026, definitely a year where we reclaimed lots of opportunity and bullishness. We had so many consecutive weeks of green of SPY and QQQ. And so far, we're about 9% on the S&P. We're at record highs, even though we had a bit of some choppiness here in June. There was a really strong second half. You know, initially, I believe we had a bit of a drop earlier in the year, but the second half now, AI,
So I'm gonna get you to make sure
semiconductors.
we ain't got no holes and
Ooh.
make sure
And so there's lots of opportunity here. Did anyone here catch SanDisk, Micron, ARM? AMD, any of these tickers in the second half of the year. Those are a lot of opportunities to just be grateful for. And we've seen memory costs skyrocket to such an extravagant degree. And so this is where the easier half, possibly, is over. And just for you to consider, right? Because the Federal Reserve being dovish, which meaning that they're so willing to lessen rates, it's over. Inflation is too high. And this new Fed chair is signaling having those rates stay the same or higher for a bit longer. And so that actually changes how we trade with every rate sensitive name. We actually got one of the first big movements in a while from the actual FOMC Federal Reserve meeting day. Did anyone notice that? We got like the first real move in such a long time. And it was in this anticipation, but now there's going to be a different story being written. But one of the major things that we're looking forward to is that we're going to have earnings, another big earnings season right around the corner in just 2, 3 weeks. And we're going to have, after NVIDIA, AVGO, and Oracle all beat and they dropped, July is going to be the month where we trade the reaction, not the headline. All right. So that's going to be something that we certainly pinpoint in this area. All right. And so behind every July trade, we're thinking about the Fed. Some tickers to really watch are IWM, which has been the strongest stock regardless of everything. But IWM will be one of the most important stocks to look at here. Another sector to look at is the banks, XLF. What are they going to be doing and configuring as all of this is going along? We found ourselves in a choppy area here with banks during June. We increased in the beginning of June, but now we're at a standstill as we're considering all of this. So the second half of this month is going to be the main event. It's likely not going to be tomorrow, which is July 1st. But we likely can get some big moves as we have all of our time frames reset and we start anew here for a new quarter, new month, new 6 month. And then we're also going to be reassessing AI. What's going to happen when we consider all this capital expenditure? The market still wants higher for these memory stocks. It's proved that to us these past few weeks, even as we've had some choppy movement. But there's still a place where we are considering upside on MU after they beat earnings by an extreme margin, an extreme margin. Micron beat earnings by. But we have to watch very closely to this capital expenditure. And now, one of the main things, and this is a learning moment, and we had a full session at the time of this recording yesterday, specifically on the setups and core setups that we're using at every given point. All right. And this is often in the ways of trading back through ranges. All right. The main thing that we do is that we find a range defined by a high and a low, where price clearly went one way or the other, right? Clearly went one way or the other. And we define the range by that high and that low. And if price at any given point trades outside of a range, but reverses back inside of it, that is where we find our entry and an opportunity to get to major highs, to get back to major highs. That's what we typically look for when we're thinking about the upside. If I were just to flip this entire thing upside down, that would be the same, be true for the downside. So it's always about what range are we identifying and trading back through. It's an easy way to identify a high quality trade and set your risk and reward. The other core setups we are looking for, oftentimes, are hammers at the bottom of ranges or hitting previous lows, or shooters after hitting previous highs. Those are high quality setups, and we're going to demonstrate exactly what those look like. And so just take this note down. Feel free to screenshot this page. We had a few people ask us, where's some additional information that they can consume leading up to the challenge as well as to our next cohort once we open up doors. This is something that can really change your perspective or just add to the additional sense here, because this is how we're going to be processing through how we consistently find 500% trades every single month. At least one, at least two, at least three. And oftentimes it happens because of that level of preparation for the execution. And now moving on, next, mark these dates. Feel free to screenshot this as well. Tomorrow is the first day. Your homework, once tomorrow opens, is to mark the monthly open. What price is that? That's the price that every stock opens at. Once 9:30 a.m. Eastern comes tomorrow, mark that price. That is going to be your North Star for the rest of the year. Believe it or not, that price that stocks open at tomorrow will be your most important level to consider from July all the way to December. Because whether a price is above or below that will dictate how bullish or bearish in terms of momentum it has, especially across time frames. So that's going to be your homework and one of the action items to take note of. We'll recap on what your action items are once we get further into the session. Next, we have our June jobs report. And so that's going to actually consider how we start this off, how well the market's doing, and how that's going to inform our interest rate decisions later this month. This is actually still a shorter trading week, as many of you have understood. But if you didn't know, the market is closed on Friday. We have our 4th of July on Saturday. By mid-July, we're going to have our June CPI data. And again, we have to understand where is inflation right now. That's going to set the tone for the rest of July and then going into August. And then the last 2 weeks of July, we're going to have some major heavy hitters here with earnings, including Tesla, Netflix, and Google. All right. By the end of this month, that's when we're going to have our Federal Reserve meeting, and that's going to definitely charge the game up. All right. And so, one interesting thing to note, and I don't know if anyone's been talking about this, is that we're going to be getting not only the removal of the pattern day trader limit last month, but now in July, we're going to have options trading hours on select tickers extend 2 hours before market open. Can you believe that? So you'll be able to trade Tesla, Nvidia, Apple before market open on their options. And now for some of these stocks, a lot of the moves surrounding earnings and economic data is now actually tradable on options. And that might sound great, but we're going to have pre-market movers, and some of the spreads are going to be wide, and liquidity is going to be a little thin during those hours because we know majority of market volume happens 9:30 a.m. to 4 p.m. Eastern. And that's true for stocks, currencies, crypto, and more. And so that's going to be really interesting. Let me know if you heard about this or not and what your initial thoughts are hearing that. You're going to be able to trade calls and puts in the morning. That might be interesting, especially if you're a swing trader and that you want to take profit when that pre-market is looking really good. But there's a lot of stuff that's changing just a bit. And it's going to be important that we maintain a decent handle on what our existing strategies are while remaining adaptable as the playground that we've called home is changing in front of our eyes. It's like seeing your old community change, coming back to it after going to college, coming back home from war. Suddenly the market is someone who's growing into something that we still see and has the same looks, but don't recognize just as much. So I'm definitely curious, and there's going to be a lot of testing we have to do around that time. And so this is one of the slides I like a lot. Is a lot busy here. And again, we're going to share, if you guys stay to the end, we're going to share with you a direct playbook covering all the stuff that we talked about in today's session so that you download it. You have a PDF that you can read through and have all this data in one place, just in case there's anything that you missed from today. But this slide is about following the smart money, following the government, the administration, and now their strategic stakes. They're buying stakes in companies. They're a full playbook by themselves. Intel, which was a ticker at today's recording, went pretty crazy. And they're up triple digits percentage on their position. So we're going to continue to watch Intel. And keep that name in your mind because it's also something that Jamal's covered. We also have MP. We have Lithium Americas, LAC. USAR. That's a rare earth minerals. Those are also stocks to be looking at. If you guys have followed the news, Eli Lilly being highlighted in some conferences by the president. It has some insane movement. And we're going to talk a little bit more about that sector as well. Eli Lilly. And now there's something called Project Vault. Put that down in your notepad. Project Vault. It's a critical minerals national stockpile. And it's covering all critical minerals like copper and coal, metallurgical coal. So copper and coal, put those down. All right. And so there's going to be a $2.5 billion strategic reserve bill to be able to play that market and buy into copper and coal. So we want to think about those materials. And on the personal side, Mr. President, on his own portfolio, think about Nvidia, Microsoft, Amazon, Meta. Of course, we're always watching them. But also ServiceNow, Adobe, and Palantir. And so this is an area where we want to think about pattern recognition and keeping our ear to the streets. There's a really nice app that you can download today. It's called Autopilot. And that's an opportunity where you can actually follow some of these decisions and insider plays from these big players. All right. So just some things to consider here. Now, we're going to cover now some real watch lists and some tickers. All right. The name of the app was called Autopilot. And I see you guys posting some thoughts about that pre-market trading. A little crazy, isn't it? They're trying to essentially bring futures trading to options. So I'm just very curious about how liquid that market will be. And so one thing we want to consider, and again, what's laid out here is specifically how we're going to be looking at a lot of the tickers that we're finding on our watch list today. It's about identifying the high time frame setup, defining where our trigger is, especially if we have a hammer or shooter, a break of those, defining what the invalidation point is, where we are wrong. It's always useful to start where you are wrong first to then determine how you risk and perform in the market, and that we're trading on our trigger. If there's no trigger, there's no trade. Put that one down in your notes. No trigger, no trade. A bird just hit my window. Hope the birdie's okay. That was crazy. So what we're going to be covering here, there's some important levels here to just mark on these important sectors. So on SPY, we just want to identify that all-time high level. Think about the gap that we're looking to fill. QQQ, semiconductors, all the same as well. The biggest sector I want you guys to think about this month, the top sector looks to be healthcare. You can track the ticker XLV, X-Ray Lima Valerie. And why healthcare? As AI trades and stocks get repriced and the Fed is continuing to be hawkish, we're going to see some defensive rotation, rotating money into stocks that are going to continue to be around, but not be as punished by the AI craze and expenditure. And so we've been looking for healthcare to start to make some moves as well. And it started up here in June. And that's leading to having an echoing month here with July. And Eli Lilly is, again, in one of the major areas here. And it's one of the biggest sectors you want to be watching. So really pin healthcare as something to pay attention to, especially if you're bullish. Furthermore, as banks kick off earnings, they're going to be around the second week of July. Banks always lead earnings season. And so we have to think about, again, the interest rate decisions, how they're responding to that, and inflation at a greater deal, how much money they're carrying, so on and so forth. And so we're pricing in this rotation around here as we're thinking about a lot of these tools and more. And now what to highly consider here is just thinking about, again, these sectors as a whole. So if I were to rank these sectors, I'm thinking about healthcare, financials, technology, and communications. Oil, XLE, has kind of found its way in a bit of a tizzy, getting a massive drop this past month as things in Iran and with the United States somewhat cool off, allegedly. And so now we're thinking on where does oil go from here? And it's going to start this next quarter as an inside quarter. So we may have something to break out of there. So energy will definitely be a watch, but it will be a bit of a shaky area to look at. I don't have big opinions here on the other sectors, but XLY can be a bit underrated as we're thinking about Tesla and Amazon, especially recently, as they've had really big movements to the upside. So that's going to be our read for July with thinking about the sectors to pay attention to. And then these are going to be the runner-up stocks. And then I'm gonna pass this over to Jamal to cover his top picks, all of our charts, and then I'll follow up with my own. And we're gonna tell you guys about your next steps and then give you guys some good goodies to leave off with so that you guys are prepared for this next month. Sound good, everyone? And so the runner-ups here, I want to highlight those banks. That's going to set the tone for this next 6 months. All right, or at least this next 3 months, this next quarter. All right. Tesla and Google are going to start our big tech season. I would think high hopes for Google, but again, that AI expenditure is going to be one of those topics. All right. Intel is going to be a big play as well. The government has a financial interest up in there. We just never want to look away from that. we have to look at the memory stocks as we've mentioned. We talked about healthcare, and then also considering brokers once again. Thinking about Robinhood, SoFi, Interactive Brokers. Those are going to be some important things that we cover, and making sure that we're keeping our ear to the streets about what these tickers are doing, especially as it relates to how they are increasing investor activity and belief in the system. All right. K Shigs dropping some game here in chat. There's a ETF called Disk. Thank you for sharing that. That'll be another thing to consider in addition to DRAM. DRAM has been one of those big memory ETFs we've watched, and now there's a new one called Disk. Thank you for sharing that. All right. So I'm going to pass the baton to Jamal. We're going to get some awesome setups. I can't wait to see what he's cooked up. And so, Jamal, you want to take control? Go ahead, brother.
Yes, sir. How's everybody doing so far? Let us know in the chat how you feeling. I am now in control. Feeling rich, feeling good, feeling great. How are you? You? All right. So I went into my bag this month. Like I said, last month was kind of a topsy-turvy. So I want to, get a more stable ground. And so my favorite thing, as you can kind of see, there's a kind of reoccurring theme on here, is that good old-fashioned fail two down. And so I've just been hunting for those simple, sweet setups on the higher time frames, the month, the 2 month, the 3 month, the 6 month, because I don't know if we mentioned that all of those time frames are going to be resetting this tomorrow. So we're going to have brand new month, we're going to have a brand new 2 month, we're going to have a brand new 3 month, we're going to have a brand new 6 months. So it's imperative to be looking on all of those time frames going forward to see, the potential setups. So first and foremost here we have Fast, which is just honestly a stock that I haven't played ever. But looking at the chart here, we do have a fail two down on the 2 month. If we can expand here. So this is the 2 month chart on Fast, short for Fastenal. And as you can see, that good old fashioned fail two down is basically a sign of the bulls coming in and bringing this stock back from the low. And so what we will want is that the bulls continue into the next candle, which in this situation here specifically is the 2 month. But some other things that we also do want to notice, if you look at this indicator down here, it's also telling you, what's happening and what the word is on other time frames. And as you can see, it's pretty much all green, which is something that I do like. I'm sure everybody likes to see all green. So on the 2 month, we're green. On the 3 month, we're green. On the 6 month, we're green. On the year, we're green. But we also want to be mindful that there's an inside candle on the 6 month. And on the 3 month, we do have a fail to up as well as on the 2 month as well. So we want to see those fail to ups be invalidated, especially since they're already green, they're not red, so they're not necessarily bearish, but the candlestick actually is, could be considered a bearish candlestick. So if we actually take a look at what it's actually doing, um, this is Oscar, which was my surprise. But if we take a look at what it's actually doing, oh, I'm sorry, that's on the 2 month is a fail two down. That's the fail two down what I was talking about. And then on the 3 month, we have the fail two up. So it took out the high of the previous 3 month, but it didn't quite close above it. But still, we have this bullish kind of candle with the wick to the downside is greater than the wick to the upside. and it finished, if we were to split this in half, as you can see right here, is the half splitting right here. It finished above that half of the quadrant. So we got the upper half and the bottom half, and it finished well above into the upper quadrant. So that's definitely bullish. I definitely want to keep eyes on Fastenal. It is something that's slightly cheaper as well. I kind of went into this month actually looking for some things that are cheaper as far as the price. Um, so this just a pretend contract. If you were to get, next month, July 17th, the $50 call, these are your potential target points here. I'm not sure if they're big enough to see, but something like that will be somewhere maybe around 80 to 90 cents, getting the $50 call on Fast Tail. And then at these target points, you can kind of see this target point here is 130% return. This target point here is a 72% return, going to 49.67, with your entry being above the trigger on the 2 month there at 48.29. So Fastenal again is super bullish. So that is something that I'm going to be watching going into the next 2 months to see if we can get to this magnitude here at 49.67. Oops. Next one up is Starbucks on the month. So Starbucks does have a strong higher time frame uptrend. The year is green. I do like it above 105, so I definitely want to see it do a trick before I get heavy into Starbucks and finish above 105. And again, the reoccurring theme on Starbucks is that it has the fail to down, in this case on the month. So again, we have mostly green here on Starbucks. The month is a fail to down as we're looking at here. The 2 month is a fail to up. So we want to see if that invalidates. The 3 month is also a fail to up. 6 month is just a two up, and the year is an inside candle as of right now. So Starbucks, I definitely want to see it get back above 105 here, trigger this month, and then potentially take out that 108, which is pretty much the high of the previous month candle. Now, if Starbucks can't get above that 105, then it's definitely not going to get my attention. So it definitely has to do that trick of getting and holding above the 105. And then again, here you can kind of see an estimate if you were to get the 107 contract, what your potential take profits would be on the course of it getting to this 108.88, which is the magnitude there. If it was to get to 108.88 and you were to get the 107 for July 17th, then that would be pretty much almost a 200% return. If Starbucks was to get to 107.25 with the same contract, that would be 100% return, and so on and so on, with your entry being that 105 on Starbucks. Again, it definitely has to stay above that 105. That's the trick that it has to do to get my attention. So as long as it doesn't do that, it's not going to have my attention. So when it does do that, that's when I'll, pretty much see it if it's worth the money. So we definitely talked about Intel. Intel is just super bullish. I don't really know what else to say about it. So we did have a nice chance to get in several maybe days ago when it was doing a bull flag kind of break out over here. But as you can see, it's already kind of retested that bull flag and then shot up again. So this was kind of the bull flag here where we could have gotten an entry anywhere around the retest, maybe even yesterday. But now it's already, at the point of taking this picture, it's already at, retesting those all-time highs. So with this, I'm just waiting for, a potential pullback. As you can see, it's super bullish, 100%. So we have all green here, all green there, which is definitely bullish. It's nothing else but bullish. So with this, I'm definitely hoping for a retracement, but if not, Anything above the entry there, I set it to 143. Anything above that entry could potentially be, a good entry on a continuation to the upside into uncharted territory because I believe this is at all-time highs. Again, if we have contracts on this, potentially the 180 going further out of the money just to play the momentum on this. The 180 could offer you, some significant gains if Intel remains to be super bullish going into the next several months. So I definitely like Intel, definitely would like to have some sort of semiconductor on everybody's watch list because these things just continue to, make new highs, especially with Intel, with the battery putting this back by the government. So they're definitely going to be making sure that their investment pays out as they've already done. This is basically like what quadrupled in price since the original investment from Donald Trump and his crew. So that's definitely one to put on your watch list at the least. Wait for that potential retest of any of these levels or pullback, and then try to get in on a continuation to the upside. Yeah, again, just trying to get the momentum on that deep out of the money calls, like I said, that 180 for July 17th. It's just an example of how to get in on that, just to play the momentum. Something else that we kind of missed as far as, well, I talked about this, I think, on several Monday morning charting sessions. So this was a Monday morning where I was saying that this was a great structure to potentially get in on this to take it back to, at this point in time, 300. It did that by the end of the week, and now it's continuing up. So this is another one that has, it looks like it's at all-time highs, Pan W. So it's basically a structure breakout on the day. And again, just chasing this as far as the momentum, those out of the money contracts to chase that. The monthlies even on this are pricey. So I would say even to take something like this week by week to get those, cheaper weekly contracts and still play it off of the momentum. So something like this, again, looking for an entry above where it is now. That's looking like 345 potentially. Taking this above that 345 into uncharted lands again. If it can reach what's that? 370, then we can have a 200% return, 360 of 100% return. 353, I believe that says, is a 50% return on a potential 370 contract for Pan W. Again, if you can't do Pan W, I would at least put some sort of cybersecurity ticker on your watch list. So that includes Pan W, that includes Crowd, that includes DDoG, that includes Fortinet, that includes the Scalar. All of those are relatively pricey, so that's what the whole drawback is, trying to find a place where you can get in, where you fit in as far as affordability on those cybersecurities. But also you could track Bug, BUG, the ETF, which is cybersecurity. So you can just have an overstanding of, where that sector is going in the not too distant future. Pan W definitely looks really, really good though. So we talked about FAS, we talked about Starbucks, we talked about Intel, we talked about Pan W. Now it is time to talk about the elephant in the room. I'm sure everybody in this room is aware of a game called Grand Theft Auto. And so Grand Theft Auto is definitely something that we should watch, specifically for the catalyst of its release. So I think MSN reported, I want to say either today or yesterday, most likely yesterday, that in the first hour of the pre-order eligibility, where you could pre-order the game, they made $1 billion. And so it cost them $1 billion to make the game. So they've already recouped their losses of making the game. Now I'm sure there's also costs and expenditures for advertising as well. But just to give you a gist of how serious this game and this entertainment conglomerate is, um, with those numbers. And then I believe video game numbers in general, I think I'm coming out on Thursday. So all of the video game companies are going to be telling, investors or whatnot how much money they're making. So I think maybe Take-Two might have released even more in-depth information about the pre-orders. So as of right now, that's the only kind of solid bit of information that I know of from a reputable source is that they sold 1 billion pre-orders within the first hour of it being open for pre-order. But having said all of those things, Take-Two actually has a fail to down on the 6 month, and it is, I believe, near all-time high. So this is something that you just want to keep on your radar as well with Take-Two. Again, Take-Two is super bullish. Lots and lots of green. So the 6 month is a fail to down, but it is red. But if you look at this candle, it's extremely bullish because the bulls drove price all the way back up from 187 to close at let's say 249, almost 250. And so the bulls are definitely present, and I I have no doubt that they're going to be present within the next 6 months. Um, just for anybody who's not in the know, this game doesn't release until November. So that's, ample amount of time to watch and get in where you can fit in. But this is definitely something that I'll be watching for the next 6 months because I have no doubt that this game is going to break records. And this is what the investors have been waiting for the longest time. Whoa. So I wouldn't be surprised if this stock from here, went up $100, maybe even doubled just off of people flooding in to Take-Two once the numbers and the things come out for Grand Theft Auto. So definitely keep this on watch. See what happens on Thursday if they actually do announce some numbers and solidify, those numbers from the pre-orders, and that'll just drive more investors into this. But I definitely like that on the 6 month. As you can see, it looks pretty tasty. I'm not gonna lie. So the last one is something that I definitely I'm in agreement with Keith, so he's gonna talk to you about HIMS. And the healthcare sector is something also to keep on watch. So since he's going to talk about HIMS, I want to talk to you about Oscar Health. So Oscar Health is something else that's, pretty cheap. And then it definitely has been running, as you can see here. Doesn't necessarily excuse me. It doesn't necessarily have the setup that I'm looking for with the fail to down on any of these time frames here. But that doesn't mean that it's not necessarily worth your watch list and worth you potentially giving it a chance if it can break and hold specifically above the monthly target here, 30.66, and just, give us a two up continuation. We could definitely see 37 on Oscar Health. Again, this one is in the healthcare sector, which we mentioned earlier is definitely something that they're rotating into. And so I would also recommend that you have at least one healthcare sector stock on your watch list, whether it's Oscar, whether it's HIMS, whether it's CVS, whether it's Humana, whether it's Lilly, whether it's UNH. Get in where you fit in. But Oscar Health is definitely something that's, more affordable, still on the affordable side. And who knows, we could see this, continue to go up until it, really becomes a household name, just like a MVO or a Lilly or United Healthcare, because it's definitely a strong, fundamentally sound company. And just on that side of the town, it's definitely something to devote some time and some effort into, seeing what they're about um, for the next 5 years to 10 years as far as growth, being a growth company in the healthcare sector. But again, above that monthly trigger there, 30.66, that's also the trigger on the 2 month and the 3 month to potentially take out this all-time high here of 37. As you can see, this is a relatively new stock as well. So we want to get them when they're fresh and new, and then they grow old and rich, or old and expensive. So we get them when they're fresh, new, and cheap, and we hold on to them until they're old and expensive. So this could potentially be a banger for the next 5 to 10 years, Oscar Health here. So that was my late in the game audible Oscar Health. I definitely think that's one worth also taking a look at as well. But other than that, does anybody have any questions? I think I did a nice job. Hopefully, all of these are going to pay out. Oscar Health, yes. I mean, it's definitely a short-term play as well with the healthcare sector booming right now. But I'm just saying because of where it's positioned, as we can see on the chart just now, it's a relatively fresh, cheap company. So don't just stop looking at it in the next, 2 to 6 months. It's something that can continue to grow until it's a household name like a Lilly, like a Hims, like a UNH, and then it could also have that price that those companies have. Lilly at a certain point was $900. UNH is the same. So it's definitely a company worth buying shares in. Yep.
All right, all right, all right. So, uh, here, let me share screen. I see someone's asking about American Airlines as well.
Hmm.
Um, that's definitely one we all should look at. And it's not here on the slides here, but it's something that came up that I posted to Twitter. If you're not, here on Twitter or X, whatever you want to call it, you can drop us a follow here. This is mine. Is it Sofa King Super? Is it simply just that, Jamal?
Yep. On everything. Yep.
All right. So just dropped our X profiles there. You can follow us just to see uh, how the full months mature as we execute and look at and review all these things. And you can also go there if you need additional assistance and more as we cover all the tickers and setups that we see, as well as reviewing trades and strategies so that all this starts to land even more for you guys. As Jamal had mentioned, one of the major things I'm looking at here is hymns. And so hymns and piggybacking off of a lot of the areas that Jamal has mentioned about a lot of the things that we're looking at, it comes along them being the same execution point, right? We're seeing prices of stocks hit previous lows and then show us a lot of buying, all right? Anytime you see this long skinny line on the bottom of wicks, that is a lot of buying after a lot of selling. And so buyers are trying to take control. What's happening here, as this is the 6 month, is that HIMS is closed back into the range of the last 6 months of 2025, which were bearish. And so HIMS has the ability from here to trade all the way back to 73. And believe it or not, that's 150%, between 120 and 150% increase in the stock from current levels. If you don't think that HIMS can do that, well, you ain't seen HIMS yet, right? Because HIMS has done this 4 times actually at this point. And moving that much of that amount in the same period of time. And so hymns can be very volatile, but there's this opportunity as we retrace through this range, whether it's back to where that stock opened. So there's initial targets here of 48, and then max targets there of 73. This hammer is the icing on top. And so a break above 36, I have my alert set to buy a leap. And I'm looking at January and March, $40 calls for next year. All right. January and March, $40 calls. I could go further out of the money, but I'm not trying to get too risky biscuit. So that's what I'd be looking at there for hymns. Everyone understand? And Jamal posted here, that's a potential 1,000% trade. All right. So definitely keep your eye on Big Him. Affirm, I'm looking at for basically the same reason. And I hope you guys really adopt this and start to understand what are we looking for as you take along our playbook PDF that we're going to give you as you watch the recording after we're done with this. Take a look at all the things we're looking at when we're finding these trades. And we're reviewing them as the next 3 to 6 months goes along. And so now this is the 6 month for a firm. And this is a hammer. And so now since we hit a previous low, then formed a hammer, and there's some buying demand that we clearly see, this is going to 100. $100 calls for a firm. This is the 6 month. On this monthly time frame, it also has a hammer, if I'm not mistaken. Just gonna double check. And yeah, it has a monthly right there. So this trigger is above 83. So write down in your notes 83 as a trigger for a firm going into this next 3 months. All right. There's a lot for this to recover. And a firm has actually been beating earnings a lot, given more and more people continue to default on their payments and seek buy now, pay later as their options because of the economy. But the firm can make sure that everything else that you buy later in life is buy once, pay once, and you got it. That's if that delivers. And I'm expecting from this type of movement about 300%. If we get to $100, I'm expecting 300%. I'd be thinking of September and November expiration for a firm. One big one, it looks exactly the same. You guys are seeing a bit of a theme here. This is ARKK. And now ARKK is actually one that you guys need to put a star next to because this is the monthly. This monthly chart, what you're seeing right here is actually the 6 month. But the monthly is a giant skinny hammer, and that can trigger tomorrow. So watch ARKK tomorrow. If I remember correctly, ARKK has Tesla, Nvidia, and Coinbase. Yeah, but Coinbase is the one that's kind of holding it back, honestly. So just keep that in mind. Well, actually, nowadays, because I had to double check my homework a bit, ARKK definitely still has Tesla as its top, but it has AMD, Robinhood, and now SpaceX as some of its top holdings. TEM, Tempest AI, is another ticker that you guys should put on your watch list. I'm not going to cover it today, but that's also a big holding here in ARKK. Cathie Wood, after having this abysmal 2 years, or make it three abysmal years that Cathie Wood and the firm had. but we're climbing ever so shortly all the way through. And so that's something to really keep as a top mark there as you're looking at the market. All right. Now, some additional things I'm going to show you guys. So this is typically what my dashboard looks like, my battle station, as we call it. And I'm often looking for a list of 60 tickers that I'm typically at least, taking a glance at. 60 tickers and across 4 time frames. And I was able to see that Tesla was one of the biggest bangers here in these past couple of days and weeks because Tesla had this quarterly setup because it simply hit a previous low, right? And traded all the way back through this range. And so back in April, when we started this quarter, we hit a previous low on Tesla and then traded our way significant highs there. And now Tesla in only 3 days just recently did the same at the same exact trigger and with an opportunity for this to return to previous highs at 445 and 450. So Tesla is still going to be one to watch for sure. It's just not one of the major tickers that I'm looking at. But the one thing you want to mark for Tesla, I'm going to make sure you guys set your alerts, is that 433, Tesla has it set up to do something similar to what SPY did today and have some really big outcomes. And now that could position Tesla back to 453, like we mentioned, or back to all-time highs around 500. The last two things I want to, actually, this is going to make it four, I think. Excuse me, three. We're going to make it three. So Roku, something that none of you people in here are thinking about. Roku on the 6 month, this hit both a low and a high, and now is trading inside of this range of all this red. Now, if you ever see a stock close inside a big old red candle like this did just now, that is a huge signal that all of this selling that happened, all of this selling, we are confirming that they aren't about that life. The sellers up in here are not about that life, and we just tested it against them. That's kind of how I think about when we close inside of a giant red candle, a giant red fair value gap, right? And so it's very likely that over the next couple of months or years, however long, Roku above 140 has the ability to start trading and make $100 move from current levels. And so I would start thinking of 2028 calls from here, 2028 calls, January, and swinging this all along. And this is at the same time where this came out of 2 years of consolidation, a start of a break last year, and one more break in this direction. And so that second break in the same direction is often the big kahuna. So Roku is one to not sleep on. Their spreads can often be a little suspect, but if we're trading a long-term period trade, there's space for us to make an impact and find ourselves within it. And so I want to look at Roku tomorrow because we actually may start to see a move as soon as the market opens. I don't have any bearish setups really for today's new month charting. And I will be honest, that does scare me a bit. But there's plenty of setups that just aren't as obvious that we may start this next 6 months bearish. So it's just one thing to just consider and be aware of. Another setup that looks very similar to all the ones that we have called out is XYZ. I've famously written this stock off and vowed to not trade it. And I've also cursed the name of Jack Dorsey, the former founder of Twitter and current founder of Block. Because can those Cash App wands and different things actually benefit the stock in the future? The chart seems to agree, but my heart seems to not want to. But I still want to always make the opportunity available if anything there changes. And so from here, there just may be an opportunity from 79 back to 100. But that's a big maybe. But I just want to bring attention to it such that people are still aware as it continues to make higher highs and higher lows over a higher time frame period. And then the last thing I want to share with you guys is American Airlines. Thank you guys for taking notes here, family. And so American Airlines, anyone who trades the strat knows how significant it is when we have an inside candle followed by a three, followed by an inside candle, followed by a three. Anyone who trades the strat knows that that is the holy grail. And that's only getting caught up in numbers. I really want to focus more on what the chart is showing. First, we have a big hammer after making higher lows. There's a big hammer on this very large time frame, which is the 6 month, and that's after making higher lows. All right. How do we know we're making higher lows? Well, I could actually list it like this, connect these dots like so, and then create a trend about how we're currently trading. And so over this past month, American Airlines has shown a huge volume spike without earnings, first of all. This is without having an earnings call, and has shown some of the biggest volume ever since we've been trading this since the pandemic. And so as this continues to make higher highs, higher lows, and target these previous highs, this can get stuck here at $19. But if we blow past that, it's a giant likelihood we're surging to 26 and achieving a 43% increase in the stock. That would be one of the biggest opportunities of this year. And I thought I'd throw this in as the haymaker at the end, just to bring you guys awareness to this, as this has broken out of a downtrend and it's now shifting to one to the upside on volume at that. So if anyone else has watched AAL, and I know someone asked about it, that's something to just consider there. Some runner-ups and some questions in chat. There has been something weird going on with Fuel Cell. I have acknowledged it. We did look at it today on our daily call. All right. And it's definitely strange. This has gone from $7 to $36 in just a couple of months. And this can go up even higher. But based on all of the tickers that we covered today, does the setup make sense? Are you guys picking up what we are putting down with most of the trades that we found today? Where we are looking for obvious reversals off of previous levels and trading back through ranges to some previous side. That's been the theme. And then it's less of just breakouts and more of trading stocks back to areas of proven value. That's the cornerstone of everything that we're covering. All right. Make sense, everyone? Every single setup that we are identifying and the triggers, we are looking at September and October at the earliest and January at the latest for just about every setup that we talked about, right? Obviously, everyone is free to trade weekly, 0 days, whatever you want, right? Um, but at minimum, you guys want to start considering at least a month out, right? But since a lot of these steps we talked about are on the 6 month, on the quarter and the 6 month, you typically want to double your expiration. So if we're seeing a setup on the monthly, right? So we saw Tesla, right? On the month, we have this big old hammer, right? If Tesla breaks above that 433, well, we want to see this try to get to 458. We're gonna expect, hey, we'll give this a month or two. So if there's a 1 month chart, give it 2 months. Look at August expiration, right? If we're looking at a 6 month setup, that's what's causing us to double that. We're looking at 12 months out. So end of the year at the very least, right? The quarter is going to be, typically for a lot of these monthly setups or 2 month setups that we kind of come across. And so there's a few bearish things I just want to really point out. Like, I'm admitting that there is quite a bit of just not very bearish, obviously bearish setups yet, because so many things that we love to trade that kind of finished this month up very bullish. Baba is something that has been bearish for so long. I'm expecting a bounce from that. Coinbase is something that's been bearish for so long. Tomorrow, actually, I'm expecting a bounce from that. I actually have a note here that says full port tomorrow on calls. We'll see what tomorrow delivers. But something I'd say maybe consumer staples, as we've seen Pepsi take a big dive, and Walmart and Target may start to cool off. Walmart has this giant shooter after hitting a previous low. So we would want to consider that as opportunities to the downside. But I'm just throwing that bone in there because there's not many, which can tend to worry me at times. But as the month shapes up of July, at least this first week, and we have the shorter trading week, it's going to be more so next week where we make some big discoveries. That's going to give us more data and information to work with as the next quarter starts to shape up. Does that make sense, family? So with all the data that we have now, we can produce these setups and execute once they start to show up. Costco is another one that's bearish. But that's what we're going to do and be watching for. I'm gonna we have about 8 more minutes left, family. So what I'm gonna just share is gonna be your action items as well as some information if you want to join and take on this challenge of the next month with us. That's gonna be some additional areas that we cover. But let us know how we did so far in chat. So far, yeah, Nike is definitely cooked, and Netflix. Let us know out of 10 so far if this has been useful, if you took taken notes. Always want to, get feedback. All right. A couple of things that we're still watching is Rocket, IBM, and Rivian. Those are going to be a little interesting. I'm not fully sure about them, but they are on my honorary list here. We have RCAT that has been getting really its butt kicked. All right. But that can continue to fall and shave some money off of that. But healthcare is something that we kind of undersold just a bit, but we did talk about Oscar and HIMSS. But healthcare is one of the sectors that can have a million more upside to it. Everything else, I'm like, they're gonna try to cool it down. Healthcare, you gotta pay attention. If anything you do, pay attention to healthcare this next quarter and 6 months, man, because it's looking like it's going to be crazy. And so here are your action items to do for July. Take a screenshot of this. We want to make sure you guys are holding yourselves accountable or that we can help you stay accountable. First, again, tomorrow when everything opens, mark the opening price on SPY, QQQ, and IWM. On your watch list, all the tickers on there, you have to mark those levels. That's going to be your North Star for the next 6 months, that specific price, whether we're above that or below that. Next, look at what earnings you're going to be watching for July. We have banks, and then again, Tesla and Google is coming up. Make sure you're trading the reaction. You don't have to swing through earnings. We could actually make more money swinging or trading after earnings. If you want to know more about that, feel free to, holler at me, later on about, any of those strategies when we talk about post earnings. You can set your triggers. We're going to give you the playbook PDF so that you have all of the levels, and you can set those on your chart. We'll provide that, and you guys will be ready for that once July starts tomorrow. Um, Build your smart money sub list. Don't rely on Trump or the government to really guide your portfolio, but you can really get far by just not having to overthink your trading decisions or investing decisions if you rather just invest long term. All right. And then the Federal Reserve is going to be at the end of this month. And then we're going to have our holiday this weekend. And I think we all need just a slight break, even though we just had a break about a week ago or two. That's what we're going to be seeing this weekend. Next, if you haven't watched this, you have a full-on free class. What I'm going to drop here in the chat is going to be the full playbook strategy that we use in every single trading session. All right. And so I'm going to drop that here first, the YouTube link, so that you guys can have that. And then the PDF of my exact strategy. All right. If you don't already have it. So we're going to drop that here. So here are the two links. First, about an hour and a half, me just diving really deep into the concepts of how to really improve your trading and what avenues changed my trading and how to literally copy my strategy or get some elements from there so that you can improve on your own. And then again, the PDF there for you guys to study. All right. And then next, we're going to be starting a new challenge. All right. So you can trade alongside me, Jamal, and our other experts in our team. And we have 6 team captains coming up and forth, traders from the community who've really mastered the LVL strategy and put up opportunities and leading the way where we are having an each one teach one system. And so if you saw any of my battle station or saw any of the indicators that we utilized and formed today, that's going to be your opportunity to get real hands-on with that and really master any of the processes that we use in order to plan your trades, execute on your trades, and higher confidence. And so our next challenge is going to be in about less than 2 weeks from now, starting on July 12th and going those 7 days where you guys get 30 plus hours with us every day, grinding the setups and such that you learn and adopt the strategy permanently. All right. And so we have a limited number of spots, limited number of tickets that we're giving for this event. You guys are going to have full access to all of my trades as well. Typically, we suggest starting with $500 or less and then growing that portfolio over those 7 days. And so we want to make sure that if you want to learn a proven system, adopt it and walk away and knowing it permanently and able to execute with high quality tools, that's going to be what's available to you. And so I'm going to drop the link. If you do sign up today, you actually get access to our entire toolkit regarding the LVL, plus an AI assist there, such that you can drop in and start executing everything on an automated format. All right. And so for you guys, if you do use the code booster, you guys are able to get access to all those tools today. So I'm just dropping that there. July 12th. If you can make yourself available for at least 1 hour per day for those 7 days, that would definitely give you a boost in your trading journey. And we would make sure that we answer all of your questions, provide all the coaching that you need, and making sure that you can attain some of your goals of consistency and be able to master a new setup and system for yourself. All right. We're actually going to be having our first LVL Friday of the new quarter, a new 6 month. We're going to have that on Thursday. So anybody who's, going through the door, you guys can join us, chat with us. We'll talk about all of the systems and more that we utilize on a regular basis, such that you're able to engage and talk through all of these things. But these are the systems that have been able to help us achieve and our students achieve $5,000 per month on average, through by executing these consistent systems until you get to that point of repeatability. All right. And so if you're not able to make this challenge and not able to get tickets, that's quite all right. We'll have some more in the future. We want to just make sure that you start this new 6 month off right, and that you have the tools and confidence to be able to tackle these next few months, just to get a rhythm for all of these things. All right. And so, if there's anything from the battle station that we use, any of the indicators for how to find trades, how to, what the potential moves are for the leaps, some of the ones that we covered even today, and then also getting Discord alerts on all of these setups as they're happening in the market. All right. Um, and so we're constantly using this system just to make sure we have identification on what those best trades are, know what the potential move is, what is worth it as a high quality trade, and such that you guys are able to get as much value as you can out of the market. All right. So just giving you guys a quick update on that. We have definitely a couple more spots left for anyone there looking to engage. And as always, we just want to make sure that we were able to deliver enough value for you guys. Again, we run this same session every month for free. We want to make sure that the entire community is able to galvanize here, collaborate, share information. I learned from you guys, especially a couple of tickers to put on my watch list like NTNT, DISK. So I'm going to be researching those after today's call. And I also want to equip you guys just with the proper measure of what we're looking at, such that it's not something we're just keeping in our head. All right. I'm always available, and Jamal is as well, to answer questions readily, and that we come up with those opportunities, or at different perspectives to assist you into thinking through how you will fit in the broader context of the market.